Hi, we're Mark and Katie. And we're here today talking about buying businesses.
So another busy week.
Another busy week. Yeah, we're answering questions today. So if you have any, drop them in the chat and we will try to answer as many as we can in the next 30 minutes or so. But yeah, busy week. One thing I thought was interesting this week, there's been a hot button on LinkedIn about 0% down acquisitions. The brokers and the lenders are having a little bit of a frenzy over somebody kind of hyping up that strategy. And 0% down acquisitions. It's one thing, I guess, if you're buying out the business you already work for as a key employee, it's actually an attainable strategy. But I think for the masses, me looking to go buy a landscaping business, whereas I have no landscaping experience, it's probably not going to be something I can pull off.
Yeah. We see that a lot in marketing. People saying that you can get a seller to basically 100% seller finance your business. And they always call creative financing, which I don't know, I'm not sure it's that creative. But yeah, we see that all the time. And people, saying it's a lot more likely to happen than it really is. I mean, those deals do happen. I always like to say it, but I feel like it's the equivalent of maybe hitting like $100,000 lottery ticket. Like people will hit those all the time. Should that be your strategy I'm going to go win $100,000 in the scratch off lottery? And I don't think so.
Right.
And especially if it's in a business that's a good cash flowing business that's desirable and, maybe you're not a perfect fit for, you shouldn't expect it.
Yeah.
So it's kind of interesting. We always see, we use course sellers somewhat derogatory sometimes that it's really a good way to make people think that, you should come buy their course.
Well, what was funny is this particular person, they were promoting the 0% down acquisition, which was positioned for the masses. I think his angle was actually using investors to help fund the down payment. And that is something you can do in some cases. I think some lenders are more open to it. Some lenders are kind of an absolutely not. You still need to bring something to the table here. But using investors is an option to help cover a down payment to buy a business.
It is. And we do those deals. So we have investors and we'll do that, right? If people are a really good fit for the business. So it's probably not going to be for a laundromat or a car wash or, if you're looking to buy a home service business in an industry that you don't have any experience in, it's probably not a fit for our investors. Because we take that, I guess a long time professional money manager fiduciary standard to the investors. Like we've got to make sure that, we're being good stewards of our investors' money. And being a good steward of our investors' money means making sure that we're investing in operators that are operating within their field of expertise.
So what else are investors looking for besides that very specific experience? I know our investors are a little more stringent than others, but generally, there are search fund investors out there. There are people just willing to kind of get into the game of buying small businesses without actually running the business themselves. What are people looking for?
Yeah, maybe our investors are a little more strict because one, I'm strict about what we do.
Right.
And also a lot of it comes from my network. My network is primarily made up of people that are professional investors and have long careers and know what to look for versus maybe someone who doesn't know what they should be looking for. So obviously, again, it's one of those strategies. You can always find someone that is willing to just put money into anything and doesn't really know what they're investing in, but that's not our investor base. In general, investors are looking to make money for the most part, right? So, most of the time they're going to look at what typically they use what's called IRR, so internal rate of return. They'll typically look at that number and see if it kind of meets their criteria, do an evaluation of whether they think that you can hit those numbers. Now, in the small business space, all the deals kind of pencil well from that aspect. But there's just so much execution risk. And that's why, restaurants are such a complex topic that people say, you should never do a restaurant. We say, well, we probably should invest in a restaurant unless it's with someone with really good restaurant experience.
Right. We have an investor deal with a restaurant that's really.
I'm so excited. That's closing on Friday. I'm so excited for that one to close.
But I guess, what makes a buyer more believable to investors then? If they want to believe in the buyer's story, what should a buyer be demonstrating?
I think they need to show, some type of management experience. You're buying a 25 employee company. It shouldn't be the first time you've ever managed employees.
Right.
You're going to need some sales experience. Sales are really important.
For any business.
Any business.
Yeah.
Owner of the business is the chief revenue officer of the business. You might have other salespeople, but your success is going to be in your ability to hire and train those other salespeople. So really those are kind of the two general criteria, but then it's industry expertise. So if we're investing in HVAC, you should probably have your license already. There are some ways to get around licensing by using someone else as a qualifier. And I guess in my opinion, that's not an investor deal. If we're doing that, the operator should be the one that has the HVAC experience.
Right. Yeah. I mean, a lot of the investor deals that we've done have been pretty specifically aligned to the buyer, which has been, anytime we show those to investors, they're pretty well on board. I mean, if they hear you're on board, they're pretty well on board anyway, but I think the buyers are really persuasive.
Yeah. And I think that, I guess if I'm on board, they're on board is why we take it pretty seriously what we do invest in. I hate that phrase, other people's money, that other people use. And I don't know, I just feel like it undermines the responsibility of making investment decisions for someone else and kind of taking it lightly. I feel like it's almost disrespectful to your investors to call it that. So, I don't know. I always cringe whenever I hear that. I can't imagine people investing with someone that uses those types of phrases.
I mean, how many lenders are actually doing the full investors can cover the full down payment, the project costs, everything? I would imagine that's pretty rare from a lender's perspective, though.
Yeah, there's very few lenders that'll do 100% investor down payment. We do know some that will, and I guess as I always say about lenders is you only need one to do the deal. And so it almost doesn't matter if there's only one or two that'll do it, if all of them will do it. Either way, you can get the deal done. The most common is, I think a lot of lenders that will allow investors still want like 1% from the buyer. I think usually we want to see people at least kind of have enough to float the legal costs along the way.
Business plan and just the upfront costs of acquisition.
Yeah, just kind of something. But still, our biggest criteria is the person's experience and how good of a fit they are for running the company.
Yeah.
And I've had the view, being in this space for a while now, is, it's a lot harder to find a good person to operate and a good business than it is to find the money for it. If you have a good person, you have a good business, the money is easy.
Easier than it seems.
Yeah.
I think it seems intimidating.
It is.
Go find that money.
It is. And it's hard. And some of it is just, I've been in the kind of ultra high net worth wealth management business for 20 years. So know a lot of people in that space and investors and things. So obviously it's a little easier with, I guess, given the network that I have than probably.
We don't all run in your circle.
Yes. Yeah. Other people don't have that circle.
Right.
And even then, it is hard.
Yeah.
I have a hard time still getting investors. It seems like it should be easier, but like we can get it done.
But people do get excited once you start talking about it. I think it's funny how many people get interested and will show up with $25,000. It doesn't have to be the entire down payment if you pull from a few different people. That seems to work as well. Yeah,
and it's I don't know. I like the story for someone who has been successful and maybe sold a business and they have the proceeds. I think the returns are great. Like all the numbers, if the IRR, when you go and run the math going into a small business deal, it's going to look great. Now, whether it actually hits those numbers is a different question, but the models are going to look great going in. But then there's also this other aspect of like paying it forward. That person has been very successful and they were able to build a business and sell it. And now it's a good way to, invest in the next generation and even what's going to be a small, very small, like insignificant portion of their net worth. They're investing 0.1% of their investable assets into a transaction, like can change someone's life.
Oh yeah.
So, that aspect is always great too. And that's what we really like about it is, you can make life-changing things for our clients. We've had quite a few where, when someone's income goes up by 10x.
Right. It's amazing.
Like one of our HVAC companies, we had that for someone. So that's not the norm. We don't 10x everybody. He had a lower salary than he should have going in. And it's been a great deal. And heat wave in Arizona helped a lot.
Yeah. It's definitely not an overnight improvement. The deals have been taking so long to close, but the light at the end of the tunnel looks way better than when you set foot inside it. So we're going to answer some questions. It looks like we We've got a few going here. Do you need to create an LLC to buy a business?
You do. And so the question is just, when do you create it? We usually try to defer spending money until as late as possible. So I wouldn't recommend setting up the LLC to start your search for one reason. One, you don't need it yet. And two, if you use the LLC to go do your search and you tell the brokers, I made this mistake when I first started, is that we searched under Fleming Capital LLC, and that turned away so many brokers. So you got to search under your real name. Don't use your business entity. We typically don't set up the LLCs until we're pretty close to closing, because you don't need it until the closing date, but you definitely will need it at the closing date, because the SBA individual is not eligible to borrow from the SBA. A business is. So you have to create the business that becomes the eligible borrower, and then you as a person personally guarantee the loan.
So I'm going to skip down, and I hope I can skip back. Oh, there we go. That's just a scroll function. How does personal credit affect the ability to obtain business credit?
So you need decent credit. You don't need great credit. And really, in the most part, you don't get much of a benefit for having better credit than someone else. So the threshold is typically 680 as an average credit score. If the deal's perfect, you could probably go down to 650 or a little lower, but I mean, it's got to be, the other factors have to be really strong.
So strong, yeah.
But the criteria is pretty loose. So like 680, which is, I think, a very attainable credit score. You can have a bankruptcy on your record. If you have several bankruptcies, that's probably not going to work. But if you have one, they're likely to overlook that. And as long as it wasn't last year or 2 years ago. We even talked to someone that they had recently gotten out of federal prison, and we found out that they were eligible for a loan. So even being imprisoned does not exclude you from, being able to get the SBA loan.
Yeah. Yep. Let's see. When credit is required, can a great deal trump bad credit if you have great experience?
To a certain extent. And we ran into this once. We had a deal. I thought we had a great buyer. I think we knew they had one bankruptcy on their record, and we were okay with that, but turned out there was more. So in that instance, the multiple bankruptcies, couldn't trump that they were a perfect buyer. But yeah, it's all a sliding scale, and it's all going to be up to lender discretion. But if you have a really strong debt service coverage ratio and perfect fit, and you're like maybe a 640 or a 650, you've probably got a good chance. If you're in the 500s, probably that might not even be enough to overtake it. But it's going to become discretion and weighing the factors. Like, it's one of those things that it can come down to, the credit manager might be in a good mood on Tuesday and approve it, and they might be in a bad mood on Thursday and not approve it once you get down to that, though, since it is just completely subjective.
How would a co-borrower come into play with that? Like, if you had a co-borrower with a really strong credit score, good credit history, would that turn the tables at all?
It can. Yeah. So that can up. So basically the bank's doing the loan based off that person's credit score. So
would they need to be equal partners in it?
They don't. And we've done at least one deal where the borrower needed a little help on the credit side, mostly just because they had a lot of student loans, and that hurt the debt to income ratio. So the bank wanted someone else on the deal. So someone else co-signed. They were given equity without having to put any cash in. And I think that was something we insisted on, right? Like, if it was their mom. So if your mom is putting her name on this, you need to give your mom equity. And they did. So that was something that I don't know how much the bank would have required, but we had a certain level that we said, otherwise, like, we wouldn't feel good about being a part of it if she wasn't being compensated for the risk she was taking.
Right.
I don't know if we do that type of deal again. It all worked out fine, but it can be done.
Mm-hmm. What small businesses are trending right now, looking into car washes, laundromats, and flower shops? You're hitting a lot of the ones we talk about a good bit. Car washes are tough. They're tough to get some that have a good valuation, especially if there's real estate involved. So those are ones that car washes are ones we typically don't see work when we run the numbers.
Virtually. I mean, it's been 5 or 6 years since a car wash has worked. Yeah. Same with a laundromat. Like, it's been years since a laundromat worked. And I think that's one of the things like we really like to hammer on is that you shouldn't be looking for the trendy investment. I mean, so I've been managing money, for 20 years. You don't want to follow the trend. Like, it's always about being an investor. Warren Buffett doesn't follow what's hot. So the equivalent in this industry is following what fits your skills, because what's hot is going to be overpriced and the numbers probably aren't going to work. So the car washes, the laundromats, you're probably not going to find a deal that works. It's going to be very competitive. You're going to end up overpaying and probably, putting yourself on the verge of bankruptcy.
And it's funny to consider a business like a laundromat or a car wash trendy. I mean, that seems like something people need and they're spending on. But I think a lot of social people have really hyped them up and gotten a ton of people interested, and the prices have just kind of gotten out of control, especially with laundromats. They're so hard to make work. I think it's funny to see people talking about getting them fully seller financed as well. Maybe if they're fully cash run and they're not eligible for an SBA loan, but there are so many people inquiring on every laundromat that comes up for sale that sellers typically don't have to finance them unless it's not financeable through an SBA loan.
Yeah, which may be because they run all their revenue off the books, so they're not, paying their taxes. And you always have to give Cody credit for creating the boring phrase, the boring business phrase.
Oh, yeah.
And really making that popular. And she did such a good job making it popular that now the valuations are really high.
Mm-hmm.
But I think we used to always call it, I used to call it like dirty. I want a dirty jobs business. So it's kind of my version of boring business. But I always look like, I want something that's going to be on the Mike Rowe Dirty Job show. And that was kind of like the way that I thought of it. And one thing is we'll say, like, you do want to be careful saying that phrase, boring business. In no situation ever should you say to a broker or seller the phrase boring business.
Don't call their business boring.
Because that'll get you turned off. The broker won't talk to you. Because I think it is a lot, since the brokers hear that a lot, they kind of already put off to the side anyone that uses the phrase. Although, I mean, it's victim of its own success.
Yeah. Right. The concept behind it
is perfect.
It's great.
Yeah.
The phrasing will get you in trouble. Yeah. What businesses do we like? I mean, there are so many that, it is the dirty jobs businesses. It's the ones that still are needed in down times and good times. We don't like to say this one's next, or like, this is the business that you should buy in 2024.
I guess we don't believe there's one business that works for everyone.
Yeah.
It's finding the right business for you and your background. Because in some of the easy to run businesses, it's also, private equity money comes in. So if it's something that, can have a manager in place easily, anyone can run it, private equity is much more likely to come in. Typically, they're more equity focused than debt, so they can pay higher prices. Mm-hmm. They accept lower returns. So you can't compete with that. So that's where we love the deals. Like, was it two weeks ago? So I don't know. I had a call with him today to go through all our insurance policies for the company, the water drilling.
Oh, right.
We got a great deal on that. The $1 million a year EBITDA company for $2.5 million with a 6-month backlog. And we got that because he was the only person that really could buy that, because it still needed an owner operator in a way. It needed someone that knew how to run the business, and very few people knew how to do that. And it wasn't near a major city. So, a lot of people probably didn't want to move to the more rural market. So that's where you can get the really good deals, is finding the things that most people can't buy.
Yeah. What would be the challenges of buying a business like that one specifically? I mean, I know he has the background that's perfect for that, but he's buying into the busy season, which is tough. It'd be a tough time to learn the business, I think, even though you know the trade so well.
Yeah, every business is hard when you go in.
Yeah.
Especially, if people have come from working in larger businesses and they come into the small business that's still running things on pen and paper.
Yeah.
And you're kind of almost horrified if you've come from, a large corporate setting at how most small businesses are run.
What are your systems?
Yep. We had the call we had today with him, as he's like, the HR policies. They didn't have an HR policy. He's like, they typically don't.
Work on that.
Put it in. His wife worked in HR, so for a big company. So
perfect.
She was horrified. And it's like, well, that's pretty much how they all operate. And they really shouldn't, because it leaves you open to lawsuits. And this company actually did have one. And you have these employees that can come in and really just do nothing but make trouble. And then when they're let go, then they file like wrongful termination suits and things like that. And then you have problems if you don't have the proper HR. So it's important to have it, but virtually none of the companies you're going to look at in this space have it. So that's something that we work on.
Or there's something else that's glaringly, obviously missing. If it's not HR, it's something else.
That's something. Yeah, those are the things we work on after. But usually we won't do it. Usually there's other fires first. So luckily with this one, that we didn't have any bigger fires, so they already fixed that one.
That's the nice thing about having two owners too, is to have somebody in there doing the work and learning the procedures, and have somebody else that's saying, oh, wait, we need to be working on this as well in tandem.
Yep.
So yeah, that's great. Let's see. You mentioned someone having 2 bankruptcies. Did they get a deal done? How would that work? Co-signer. In this instance, they did not get a deal done.
They had 3. Was it 3?
I think they had 2. And I think they had 2. Well, either way,
yeah,
the deal didn't get done.
The deal didn't get done. You could probably get a cosigner, and that could get it done. So it's definitely possible. One, as long as it's not within the last 2 or 3 years, I think you're fine. 2, if you had a really strong cosigner and everything else about the deal is really strong, you'd probably have a chance.
What 2 do you think?
I said a chance.
Yeah, I'm not sure. I'm not sure. I mean, every lender would kind of use their own discretion
with the cosigner.
Yeah.
But
I think each lender would still, one lender might say, we'll consider it. Every other lenders would be like, no, we're not.
Yeah. It's one of those that probably the vast majority of lenders would say no. But again, you only need one.
So they, their plan was to use full seller financing as kind of a workaround. That ultimately didn't work out, but that's one way you could kind of navigate that.
Yeah. They lobbed an attempt at a full seller finance, which the seller did not accept.
Yeah. Right. We don't see that very often, where the seller will accept full seller financing for deals.
No, I mean, it's usually only when you have to.
Yeah.
So
which this one had been on the market for a while.
They had, yeah, but I think it was a good business that like somebody could have bought.
Yeah.
I mean, I think we used the example in one of our recent videos of, an example of where you might actually get 100% seller financing is those deals where maybe it's just really heavy on the seller. Maybe it's only they're the only employee. They have a good customer list. There's a lot of risk coming in. That could work. Mm-hmm. Things that it's going to be really hard to find a buyer for. So, I mean, it's one of those you should, if you're doing 100% seller financing deal, you should probably expect that it's going to be a deal you're going to really have to go in and work really hard at. Mm-hmm. Like you're not going to get a passive income seller finance deal.
Yeah. Right. There's no reason for them to sell that at that point.
Yeah.
Or they would give it to, I think in this instance, the broker said they probably would give it to friend or family rather than somebody they didn't know with those terms.
Yeah.
So, yeah.
Yeah, I think that was the exact phrase. If they're going to do that, they'd give it to a friend or family, not a stranger.
Yeah. 100% financing would be great, though. I guess we had a full seller finance deal recently, kind of with the franchise add-on we talked about last time. Yep. It was different. It wasn't the seller, but it was a friend of.
Yeah, it was a non-bank finance deal.
Yeah.
Well, because we're seller financing the real estate that we're buying. So the background there is we have 4 franchise locations. One of the locations, our biggest, was owned by the previous seller. They want to sell that location. Originally, they wanted cash for it. They wanted a loan, and then something changed in their life. They're like, hey, you know what? I'd rather seller finance this. They're like, the interest rate is, I'll offer you a little bit less than, what the bank would charge. And he's like, that's more than I'm going to earn somewhere else.
Yeah, right.
So he wanted to seller finance it. And then he's also giving us cash. We're expanding into another territory, which was going to be a really tough loan to get done, mostly because it was small.
Yeah.
Small loans are harder. It's like, so he's like, well, not only will I finance the building, I'll also give you the cash to go do that other acquisition.
Yeah.
And some of it's because he knows the business well. the general manager
He knows
that
the
worked
general
for
manager
him,
so well.
they worked together for 12 years.
Yeah, he believes.
So
in
I
him.
would say that's kind of an exception rather than the rule situation.
Yeah, that was fun though. I mean, that's so different than most of the deals we work on. Almost every deal we work on is SBA 7(a) loan.
Yeah, pretty much. I think we've got one buyer that's essentially just using a HELOC, to do the deal, but then pretty much everything else ends up SBA. We'll do whatever makes sense.
Right.
It just is. It's always
worked out.
Yeah, SBA is the one that almost always makes sense because
Right.
it is a government subsidized lending program, so it's hard for it to compete.
We like the SBA loans too. I mean, I think this even came up today. We like the check of the lender looking at the business as well. We look at it. We have a CPA on our team who looks at it. Mark's a chartered financial analyst. I'm an MBA. We all look at these deals, but it's still nice to have somebody else pour through the details and just give us a double check of, okay, this is good. Let's keep going with this one. It's just nice to have a different perspective.
Yeah, the more eyes, the better.
Yeah, I think so. Absentee gas station, $350K total rev, cash flow $160K, good or no good? It's hard to tell without looking at the business itself.
I don't think that's possible. $350K total revenue. How much?
Total rev was 2.4, cash flow 160. I mean,
2.4 million.
Mm-hmm.
Oh, okay. I heard that all wrong. That's possible. I mean, you're probably not going to be able to
I doubt
support
there's
the real estate.
I doubt there's an absentee gas station that's truly absentee for $350,000 is going to be the problem.
Yeah, the owner's probably working quite a few hours, even though they say they're absentee, would be my guess.
Yeah.
But 160, let's see. So what is that? That's like a 6% margin. So they could have managers in there. So like they're probably not spending any time behind the counter would be my guess, but there's still probably work doing inventory and the accounting and things like that they're probably still doing. But still at that, what was the ask? You said 350?
Mm-hmm.
That could work.
Well,
my guess, most of the time with gas stations, I don't know if I've looked at a gas station ever that the cash flow matched what was advertised.
Mm-hmm. Since it's 350, you probably are going to have that issue of finding a lender willing to take it on. Since it's sub 500,000.
Yeah,
it's a little tougher.
I'm assuming they must be renting the space at that price.
Yeah.
So you want to make sure that the rent is being deducted. So depending on who owns it, that the rent's properly accounted for in those numbers as well, which it's 6% to the bottom line. It probably is, but still worth giving it a check over. But yeah, gas stations, I think a lot of the problem with the gas stations is the cash. Yeah, right. It's really hard to buy businesses in industries that, culturally it's accepted to do a lot of transactions in cash because then that cash doesn't make it to the tax return, and the lender is going to use the tax return as what they're going to use to make their decision. And every dollar that's done off the books is going to be a dollar less that hits the bottom line for the loan. So even though it might be a small percentage of the revenue, so in this instance, they're showing a little over 6% flowing to the bottom line. If they'd reported 94% of the cash flow as on their taxes, and they just didn't report that other 6, well, guess what? That was 100% of the profits. So now, in the eyes of a lender, this doesn't make any money, even though it was a small percentage of the sales that went as cash. Yeah. Well, thank you everyone for coming today. It's been nice to answer questions and hear what's on your mind. We always like knowing what's out there. We can make videos accordingly, especially to address what the questions. I mean, there are so many things that can come up with buying a business that I'm still learning, and we see new things every day. Yep. So we'll see everyone this time next week. Thank you.